right, good morning. Good morning. Welcome to an epic news day. We got a lot on the calendar coming out at 8:05 in the a.m. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, not necessarily indicative of future results, but please stay small, stay humble. Focus on the long term, never risk money you cannot afford to lose. Welcome to Forex.Today, the YouTube community of more than 19,000 foreign exchange traders. Hey, we're interested in technical and fundamental analysis with the overriding goal of putting together trade plans for today, maybe the rest of the week, maybe the rest of the month, maybe the rest of the year. So we have to, again, take strategy and tactics and mix them together. Sometimes it's easy, sometimes it ain't. So let me know how it can help. Ask questions, get involved, make sure you subscribe. And if you subscribe every time I hit start, you get invited, right? So it makes sense. If you could, would you please tell YouTube this is quality content? And you do that by clicking the thumbs up button. Doesn't do me much good, but it'd be great if you could help promote these, or at least maybe hit an algorithm, or I don't know. You're supposed to hit the like button. What am I supposed to say? So if you could do that, that would be great. I also recommend that you take notes, and if you pull some value out of today's session, that you document that in the comment section below the recording. That way you can search through your YouTube comments and find particular videos that you found valuable. Cool. So anyways, like I said, today we got lots and lots of news, so it's going to be interesting. The most important one, I think, is later today, not at 8:30, but later today, and that's the Fed meeting minutes. So honestly, I think that's what you need to download and read today and figure out where the Fed actually sits. Stop listening to the TV. Stop listening to the newspaper. What newspaper? Stop listening to the newspaper. Instead, read the meeting minutes and find out exactly where the Fed members stand. Also, if you could, I highly recommend if you visit tradersway.com, open up a demo account, download MT4 or MT5, play some trades, and you're going to say, ooh, this is quick. You're also going to look at the spreads and go, ooh, those are narrow. What else are you going to say? Look at the swaps. They're huge. Okay, tradersway.com, I'm telling you, visit tradersway.com, develop a relationship with them. Allow them to earn your loyalty and respect. And I think you'll be quite happy, tradersway.com. What do I think about a Euro-Aussie trade? Okay. Well, let's not think about it. If you want to analyze it, let's take a look. Okay, Euro-Aussie trade could possibly be one of the most mediocre trades you could find, Abdul. Aussie is sideways, Euro is up and down and generally sideways. So you're pairing something weak versus weak. It's pretty close to terrible. Ooh la la! Ooh la la, that hurts, Wayne. That hurts. Yeah. All right, so I got a poll going. Has everyone had an opportunity to answer the poll? Yeah, I think so. So why don't we end the poll? Most people want to talk about Kiwi. Okay, what happened in New Zealand recently? The RBNZ. I'll give you a hint. It happened about 8 o'clock last night. Raised interest rates by 25 basis points to 0.75. Okay. Well, if we look at it from what has been happening since the end of September, early October, okay, back in this period, the market, and then even back here, was talking about the Kiwi raising interest rates. It all got priced in, then it just moved sideways until the new rate. Okay? So the market got what had priced in, didn't get what wasn't priced in. What are basis points? Okay, so you got 1 percentage point, okay, or 1.25. So a basis point is this area. Okay, so one way of describing 1.25% increase in interest rates is 125 basis points. Okay. So typically when you're talking to traders, you don't talk about 0.25%, you say 25 basis. Okay, Chand? All right, so the initial view of this is it came down. Okay. But if you back out further, like I said, it's not really come down, has it? Yeah, Jean-Guy says unemployment 3.4%. And that's cool because we talked about this in the day trading group, right? I was trying to go off of just, I didn't have notes in front of me, but I'm like, tell me about the New Zealand economy. I'm like 3.4% unemployment rate, right? With high inflation, but high inflation isn't enough. You got to have full employment, so 3.4, so on and so forth, right? Like you kind of need to know these things. Cool. Is Australia going to raise interest rates? No. Jimmy says, hey, J. Paul says, hey, man, can you just front run these rate increases? Yeah, well, that's what happened. That's what I'm saying. That's what's happened. So generally, they raised interest rates and nothing actually really happened. You might look at it like Kiwi has lost value. Well, if you're zoomed in, maybe. But zoomed out, not really. Okay? But that's what I'm saying. People were already front running this. Okay. So anyways, I want to get over to the news in the moment. We have a monster release of news today. Oh, look at that. That's me right now. No, that's yesterday. Okay, let's take a look at Wednesday. I think I'll even add the low impact because there's just so much going on today. I want to show that. Okay. Let's go all the way. Wholesale inventories. Well, this gives us a glimpse into supply chain issues. Trade balance. A big negative number is a good number. Continuing jobless claims. Okay. Initial jobless claims. Average jobless claims. Durable goods. Are people still buying refrigerators from Home Depot despite having to wait 6 months? Well, that's kind of interesting. Okay. Gross domestic product. Interesting, right? Some Italian news, who cares? U.S. personal spending. Ooh, this is, or is inflation too high? Well, what is inflation? Okay. So anyways, personal spending, but core PCE. Specifically, they probably, no, they don't have it here. Okay, the PCE deflator, if you want to Google that. Okay, but anyways, PCE is the big indicator that the Fed measures. So that gets released today, as well as income. Because as long as income is rising, that's good. That's sort of like wage growth a little bit. Not quite, but sort of. Okay. Then, right, we also have consumer sentiment today. New home sales today. Okay. Oil releases. Okay, and then later today, FOMC meeting minutes. Holy smokes. So the big ones, you know, we got FOMC. New home sales, I mean, we got to see if there's some still some activity going on there. You know, either PCE or PCE deflator you want to look at. Personal spending. That's important. GDP. I don't really care about durable goods that much, but it just shows you, are people still spending money? Are they willing to wait even though there's no inventory? Well, where is the inventory? Okay, trade balance. Again, I want to see a ginormous negative number, which is good because it means Americans are spending money. And of course, if they're spending money, the dollar's weakening. So look like, oh my gosh, look at all the news today. So why is there so much news today? Tomorrow's closed, there's no webinar. Friday's closed, there's no webinar. Data says the market seemed to wanted more a rate hike than the 25 basis points. That was already priced in. Yeah, well, if you want it to go up, then it has to be higher than that. It can't be priced in. Okay, you see what I mean? Like, for it to go higher, it already has to be priced in. So some people that did the front run got what they expected and they took their profit, but it doesn't change anything fundamentally. Please, can you explain preliminary GDP quarter over quarter? It's the first look and first measurement of GDP. So it's probably not a good number and it's likely to be revised higher. But just a quick one, GDP is equal to consumption plus investment plus government spending plus exports minus imports. Okay? Now, the interesting thing is, okay, we're looking at C, plus we're looking at Y, which is GDP. We're looking at, where is it? Okay, now we're looking at X minus M. New home sales is I. C plus I. Now G is not going to be in here, but C plus I plus the G, which is fixed, sort of. Okay, X minus M. So we almost have the entire equation. Y is equal to C plus I plus G, which ain't here, plus X minus M. So we're getting GDP, which is Y. Okay. We're getting almost the entire GDP equation in here. So what you could do is now solve for G, right? You could. I could ask you. That'd be horrible, but anyways. So it's just a first look. It's like a glance, a quick glance, Abdul. So I'm looking at this right now. CAD has regained some strength, which is nice. Probably because on the short run, WTI was oversold. Yen is up, dollar's up, that's risk off. And but look at the recovery. Pound has recovered. Even Euro's recovered a bit. New Zealand is trying to figure things out. And Aussie just doesn't have anything going on right now. So we have a few minutes. We can take a look around the world quickly. We can start with the dollar pairs. Okay. Now, I gave a big to-do yesterday about should you sell that close to the bottom? Okay, now you can see I have it set up as a sell. Okay, but I said it's quite late and quite dangerous or less ideal. Okay, if you were a bear, I would have liked for you to sell high. To sell low after a bounce at obvious support, you know, good luck, man. I just think you're trying to squeeze even more blood from a stone. Not the fact that you're trying to squeeze blood from a stone, you're trying to get more. I'm like, are you sure? So it is moving down, there's no doubt, and you can see that this market is bearish. But really, you're going to sell here? But I set it up, I said you could do it, but really? Okay. Take a look at Euro, much more bearish. Much more bearish. And this one was set up for a sell as well, off of the 4-hour 21 in the sell zone. And that one worked out fine. Okay. That one worked out fine. There's nothing good going on in Europe right now. Aussie, same thing, just straight up bearish and kicking off the 4-hour 21 areas. Okay. Take a look at that Kiwi. And yeah, sold hard. Yeah. Okay. Once again, very, very bearish and stayed bearish. So, you know, the little day trade here is down, 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 up, up, sell. That's what we knew last night. And oh my God, it fell. But that's what it was supposed to do. I have a question here. How would the SPR tap affect Fed's tapering? It wouldn't. They're not even the same branches of government. Taking a look at Japanese yen. What do we know here? It's still technically bearish, and I have this set up as a down. And I'm hoping, which of course is not a strategy, but I'm hoping that we kind of stay in here. But the way that the market is set, right, is this. Okay. Darko's also asking questions about why is the New Zealand dollar falling? Because people already bought it, got what they wanted, and then they cashed out. Okay? The question is, will they continue to raise? And if so, will those same investors front run that other change? Okay, I only got a couple of minutes here. So there's that Kiwi, came up, fell hard. But again, at a typical roll reversal. Okay? So you don't have to like it if you're like, man, that sucks. Okay? Okay? But look at what we know. Technically, this is bearish and is likely to remain bearish until it stops being bearish. So sell it from here on in or wait to buy it after a change in trend. Euro trying to stabilize. Hey, that's good. Technically, however, this is bearish. Okay? That's interesting, but technically speaking, this is just bearish. So that's still most likely the outcome. And then kitty cat, okay, once again, trying to stabilize at a logical price. So it'd be interesting if it stays above this zone, because that might be leading closer and closer to a change in direction. That's right, Theta. The market's closed tomorrow at Friday, so yeah, it wouldn't be just okay. Okay. Maybe it'd be best that on Sunday when the day trading group meets, maybe we all meet in the swing trading room. Maybe on Sunday we'll just do our swing trading meeting then. I think that makes sense, right? And we can go through and look for the setups on Sunday night. Would that work for everybody? Okay, news is out. Oh my God. No, at 4 p.m. Let's go through it. Okay, GDP 2.1, that's okay. Durable goods, positive, not negative. Aircraft, okay, but a miss. It's okay. Initial jobless claims, about right. Continuous jobless claims, about right. Okay, so now let's look at some of this other stuff. I'd like to have the trade balance. There's a little bit less inventories than before, and that probably has to do with good retail sales, but also supply chain issues. Probably pointing to the sign of, eventually we got to get to the end of just-in-time inventory. PCE 5.3, core PCE 4.5. Okay. Darko says, how long from your experience do we need to wait after the 2155 cross and change? Dude, that's right out of my book, Darko. Come on, Darko. Yeah, the next 5A cross. All right. Okay, so PCE is okay, basically as expected, I would say. Everything seems to be fairly close. Durable goods, but durable goods, even though it looks good, it's so volatile. Even core is volatile, so I wouldn't get too much in there. GDP 2.2, it used to be 2.0. Okay, that's great. That's more productive. That's not bad news. But then again, right, I think this is very early GDP, so, right? Oh, I'm sorry. I'm mixing them up too. Hang on. I thought I did that. But still, the thing is, nobody was expecting big changes. Man, do I have to do that again? Now I gotta do everything again. Okay. There we go. Okay. Oh, I see. 99. Okay. So that's interesting. That's a really good number, in fact, then. Look at that. Average dropped significantly. That's interesting. Cool. Now, there's still quite a bit coming, but remember the big thing that you want to do today is that, right? Is that FOMC. No, Darko is asking after the 2155 cross, when do you engage? Okay, typically it's a 5-8 cross. Okay. So that's a bad number then. Trade balance being less negative, that's bad. Okay, let's take a look at the initial response by the indices. Some Japanese yen weakness, which makes me happy. I'm so happy. Okay, Aussie, not the good one to go with. Kiwi still coming off. Pound, interesting. Okay. Now, Darko, you might be talking about this one like, okay, if this is crossing, when do I get in? Well, remember, this is pound versus yen, Great British Pound versus yen. And if you're buying this, you're just buying the pound. I'm not necessarily cornering the market on Great British Pound. I want to sell yen. So if there's only one currency crossing, it's still not even enough. When will the Aussie yen cross up? We need a good week of upward mobility on this to make that happen. Kiwi's not likely to happen for a while. Okay? Euro's kind of hard to believe. So right now we have like the giant maybe is maybe CAD, maybe pound. It may be, what, Aussie third? So it's kind of like when those other ones, right, not just pound yen crosses up, but the other ones are also, then that shows me a trend in the Japanese yen. So my play is selling Japanese yen, not buying anything. I'm not actually buying anything. I just want to sell. Okay. Okay. Coolio. So, that's interesting, right? Could you start tapping into this? Yeah, like I would look at it as it's not up yet, but it might be. Okay, so we got challenges here, obviously. Okay. So if you were looking to build up, maybe you got something like that. Maybe you do something like biased pivots. Okay. Bullish mode. Okay. And you can see still it's quite early, but you could try starting here. So I'm actually waiting for a few yen pairs. Yes. So I can confirm market direction. Correct. Right. Okay. Because if whatever's making the pound strong suddenly disappears, then I'm in a bad trade. Okay. And of course, the reason the pound is strong is people believe the Bank of England will raise. In December, in a couple of weeks. Okay. So going back to the person asking about front running, yeah, well, that's what's happening here. All the other yen pairs are down except for pound yen. Why? That would tell you the pound is stronger than the other pairs. Well, that people are front running. Okay. So like pound seems to be strong. It gave back a whole lot and now has gained back a whole lot. Okay. So Darko, yes, if you're going to trade Japanese yen weakness, you want to see weakness across the board. Otherwise, it's not actually weakness. But that being said, you can start throwing down some of the first trades if you want to try. Just realize that you're not actually in this moment actually trading yen weakness. You would actually be trading pound strength, and that might not be your intention, but you can try. Will Bitcoin function as an inflation hedge? Well, yeah, if it drops 10% in a month, that would be deflationary. No, it's a form of, it's still an asset appreciation play. It's an alternative investment, but it's not a good store of value. It's not necessarily an inflation hedge, but it's probably a good part of breaking down correlation in your portfolio. Okay? So if it's not a good store of value, if it's not a good medium of exchange, okay, it's not necessarily a good unit of account. So, right now it's a tradable asset. Ultimately, Bitcoin will likely fail, and something else will be used as money. Now, Bitcoin was designed to be money, but it's designed to be money with obsolete technology. Okay? You can never, ever, ever, ever go to Starbucks, say, I'd like a latte, and pay for it in Bitcoin. Now, if it ever comes the day that happens, they're not actually trading Bitcoin with you. They're assuming that in 3 hours, the transaction that you entered into with Starbucks will actually clear. And they're taking the risk that you don't steal their $3. But ultimately, it's not like you got a latte and they got Bitcoin. You'd be like, you got a latte and they're waiting for miners to confirm the transaction, and it takes hours. Okay? Using a different technology, let's say like Cardano, I'll pick one, right? You say, I want a $3 latte. They say, okay, great. You do the transaction. They go make the latte. They come back. They give you the latte, and the transaction is already cleared, and Starbucks would already have the exchange, the exchange of value. Okay, they would already have the ADA. So Bitcoin could just never really do that. Okay. It has to do with the proof of work concept. It's just too slow. It's not scalable. Bitcoin is not scalable. If you want to move $1 million in an hour, okay, that works really good. If you want to move $2 in an hour, it doesn't work good. Okay? So ultimately, it will not take place or take the place of the dollar unless somebody sits in the middle and somehow guarantees the transaction. But even then, the Bitcoin wouldn't be clearing. It would be someone else assuming the risk. Okay, so dollar strong in the moment. That's great. Okay, it's not that surprising since everything was bearish. Let's take a look at commodities, huh? Okay. Let's take a look at this. Yeah, Joe, and that's what I've been saying for a long time, right? So if this is the strange year, make sure, and I do this a lot in the day trading group. I'm like, be careful. Don't look at this one observation of like what's happening now over the last, let's say, even 4 weeks and say, this is how it is. This year, is actually fairly strange. Now, October was just straight up on point as one would expect. In some cases, we hit annual targets fairly early. And that, I think, is partially why November has been down. But typically, it's not. Now, it can be. And even if it is, maybe not this much. So there's a big sort of debate going on in the marketplace of what this new Fed policy is. Now, I don't know if I'm right. I don't know if they're right. Nobody knows the future. But there is a debate. And of course, you debate with your money. And things, things are interesting this year. And there's a lot of lessons to be learned. One of them is discipline. One of them is going back and doing your work, not to prove that you're right, but to make sure you're not wrong, to make sure you still believe in the work that you've done. Your bias is still valid and you're not clinging on to some old story. Okay, that being said, there's been a lot of opportunity to look at sort of a multi-strategy approach where you could be long-term long, but if the shorter or medium term, let's say, market is clearly bearish, you can day trade down until the fundamentals have come back. So you're partially macro, partially day trade, sort of a mixed strategy, multi-strategy. And that appears to be really good this year. Okay? That appears to be very good this year. Next year, I bet you it won't. But it wouldn't matter because you're already doing the right thing. So there's a bit of hindsight in a lot of what we look at. You got to be careful. Like, don't look back and say, oh, I should have been doing the multi-strategy. Well, at the time, many of these things were like, you could, but you wouldn't. And now that it's happened, you say, oh, I could have and I should have. Well, if you decided 2 weeks ago not to, you made a logical decision in that moment. And you should always go back and remind yourself in that moment what was logical. So, for example, if you buy it here, that's a very bullish buy. That's right. But that doesn't predict down here. Okay. Now, I know this is crude, so what brought this down was the SPR tap. But still, if you were a bear, you would sell this all day, every day. If you were a bull, you'd buy this, right? You'd buy all these things. And I want to make sure you know and stay with the theme of, are you a bull or a bear? Are you risk on, risk off? Are you pro-growth? Or are you, are you macro contraction? Okay? Okay? And then can you read the charts? Now, Oliver's like, hey, it's all about the moment. Well, yes and no. Remember, there's strengths and weaknesses to every type of strategy. So there's a lot to say about that. But also, when you're in the moment only, you don't see the changes, right? You'll always lag a little bit. And again, it's not bad. I'm not saying it's wrong, but there's a strength and weakness to everything, where doing something more, you're trying to understand the why of the market. If you're all about the moment, you're only looking at the what of the market. What has happened, what just happened, what's likely to just happen next. Where that's good, but it's not scalable. Okay? So the next part, if you want to be a big money manager one day versus trading just your money, right? If you want to be bigger, you need to be able to sit down at the dinner table like I did this particular week. Okay? I actually sat at a dinner table that particular part of the week, or that particular week of the year, literally that moment. And I said, oil is going to go up till the end of the year. Okay. Now, the next part of the moment, going back to Oliver, his comment, right, where I didn't disagree with you, right? I don't disagree with you. I want to add to what you said, okay? Instead, I would say understand the why first, because if I could just casually sit and say, this is what's going to happen with WTI, well, then obviously I have some research and I can back that up. Now, the next part, okay, the next part would be, now you're in the moment and you're buying these dips, 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 and then you get 100% retracement and you stop. Now, going back to what I was saying earlier, many may look back in time and say, well, I should have been now selling all of this on the way down. And I caution you, because I've been doing this a long time and I'm not right all the time. But I can tell you the human psyche will look back and say, shoulda, coulda, woulda, but it doesn't see the reality of what actually occurred. Now, right? So again, Oliver's like, well, it's all about the moment. Well, when you look back like this, you're not clearly seeing that moment. You're making up a new narrative that probably didn't exist in that moment, because you would have been redonkulously bullish here, waiting for the next move. And then, right? And then all this happened, then all this happened, and then we tapped the SPR. Okay. But, right? So it was fundamentals that changed things. But now if you're looking at other like currency pairs that did something similar, that went up and up and up, August, September, October, and now we're coming back down, 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 it's easy to look back and say, oh, well, the multi-strategy is better. Well, if you use your multi-strategy, you may be always late, or you may misread because you're being too hypersensitive of being ready to trade both ways. Because I see a lot of, traders selling in here and getting messed up, and then buying here and then selling here. And then what you'll find, now I'm not saying it's everybody, but I think what you'll find is over a long period of time, like let's say a year, what you'll find is you'll be correctly selling here, and then you'll sell here, and then that won't work out, and then you'll buy, and then you'll sell here, and that won't work out, and then you buy, and then you, right, and then you buy, and then you sell, and then you buy, and then you sell. And what'll happen is your trading actually results over a long period of time won't change as radically as you might think they will, because when you look back, all you see are winning trades. You rarely look back and say, oh, I would have lost here, I would have lost there. You just see all the awesome trades you made because you were right. Well, you know it's right now because you can see it. Okay? So it's okay to have a multi-strategy. Just don't talk yourself into that will always be the right decision. Go back to like what Joe said. Well, go back and do the research and say, well, almost 90% of the time, staying with this mode, for example, on Euro Yen is the right decision. So I would caution you where if you look this year on Euro Yen and you see, well, oh, I should have had some day trading down while I wait for the up. Okay, that might be true, but realize that only represents 10% of reality. So be careful if you take this year, which might be the year that you've focused on these things the most, and extrapolate and say, well, that's what I'm going to do next year too. And what will happen is you'll start seeing opportunities to sell in an up market, and you'll miss the up trade and you'll take a loss in the down trade. So, right? So maybe instead of having a 5% positive month, you might end up being 1% or even 1% negative because you were selling, looking for your multi-strategy in something that there doesn't need to be a multi-strategy. The multi-strategy works great mostly in sideways or in pullback markets. And that's why I try to get the fundamentals right first. So at least I know when there's a decoupling, if you will, of what was likely to happen versus what is happening. And then I can deal with it, maybe with a multi-strategy approach, or maybe by just sitting on the sidelines for a while. Okay? Okay? Now, Ali says, trade what you see, not what you feel. Well, of course, I disagree with that, and I think you knew that when you said it. But the other thing, I would say it differently. Like, I agree in some part, okay, Ali? But it'd be more like you should know what you want, okay? If you don't know what you want to do, I have serious doubts about the long-term viability of the strategy, okay? Because you need to know when markets are even stalled out, okay? So again, Ali, I'm not disagreeing, but I will take some of what you're saying and I'll add it to what I'm saying, okay? Knowing when it's not working as planned, remember, fundamentals are about logic, okay? So it's hard to argue. Money's either crossing the border or it's not crossing the border. Okay? Okay? Now the next part, though, would be to recognize that what you thought was likely to happen is not happening so that you can adjust. But I never said ever in 20 years of doing this that you should be buying a falling trend because you believe it's going to go up. And I think that's what you're saying. Now, I'm sorry if I'm misquoting you, right, or misunderstanding you, but I want to make that clear too. I don't say fundamentals say this is up, so as it's falling, you should be buying. I've never once said that in 20 years. Okay? Joe Boss is saying, it's great having odds in your favor, but you're shit out of luck, right? If what you're trading. Or again, like one of the things that we talked about in the day trading group was over the last 5 years, Kiwi dollar, okay, on average appreciated 2%. Every year in the month of November, every year for 5 years, 2% appreciation. But it fell this year. Okay. Ali says, you're on point. Good. Yeah. But I trade price action. I trade price action too. Okay. Now here's the next thing though, Ali, right? It would be like, I don't know what to say, what to call it. Like a fund trader versus, let's say, just a private trader, a private, okay? Non-regulated, trade your own money or trade friends, family, and fool money or something. Okay, so if you're price action only, and I love price action, so I'm not saying anything bad about price action. I love it, I respect it, so on and so forth. Okay? And this would be a different strategy. Now, I would use price action. Okay? But I'm going to list this one slightly different. So I would use price action, or I have to use price action. I can't trade. I cannot trade without price action. You might call it market structure or something. It's all the same nonsense. Okay? Price action. I really like pivot points. You know that. It's just me. Now remember though, I don't trade because of a pivot point, but I use pivot points when I trade. Once again, there's a difference. The pivot points don't make decisions for me. They're just algorithms that I find useful and helpful to, again, try to predict tops and bottoms based on my bias or a breach of my bias, which is another form of price action, okay? And now, so price action, let's say that's what you primarily use, and a couple of other things, but we'll just say tech only. Okay. Now, an institutional investor has to, they have to have more than tech only. You have to be able to sit down and say, well, what are you going to do this year and why? I mean, the conversation isn't about, do you use a 2155 on a 1 hour, right? Or a 2155 on a 4 hour. That's not the conversation that an institutional, a fund manager has with an investor. So it's more like, what do you think the Fed's going to do? What do you think about China? What do you think about Australia? What do you think's going on here? How about emerging markets? How are rates going to go up next year? Where's the stock market going to be in 5 years? Those are the conversations. And then based on your analysis and outlook, the investor will decide whether to invest or not. And then, of course, you better trade that thesis that you gave to them because that's what they expected. That's why they invested. Okay. Now, the big difference here is most people will have 10 trades or less at any given time. Would you agree with that? It'd be a rare occasion that you would have 25 trades open, probably even never. That most of the time you'd have 5 to 10 trades and then you take your profit and now you're down to 2 trades and then you take a couple and those are losers, so you get out and then you build a couple of more and all that kind of stuff. Where on this side, you might need, let's say, 100 trades. And the reason for it is those investors need scale because they have a lot of money. The money isn't the issue. They're not even trying for a huge asset appreciation because they already have huge assets. What they're looking for is really, so let's do it this way. You're on a private, you're looking for appreciation. Yeah, that's terribly misspelled. Okay, appreciation meaning you're trying to double your money. Over here, what they're looking for is income. Okay, so you might be going for 100% per annum. Okay, and this fund might be going for 15%. Let's say I'll pick a number that. Okay, 15%, and you're going for 100%. So there's a lot more turnover, there's less turnover, there's a lot more income, there's less income. You're not in it to catch a carry, for example, all that kind of stuff. So you're looking at trades day by day and probably a week or two in advance, and that's that. And I love it. Okay, I'm not here to tell you you're wrong, I'm right. I'm telling you they are different. And you need to know what you should be doing now. But if you see this as more than a small business for you, but instead of a career path, okay, the analogy I've used before is, this is street basketball. This is you playing b-ball in the neighborhood, okay? And then the fund manager side is more like college ball. It's preparing to go to the NBA. A much different game than what they play in the hood, right? Sorry if I'm coming across racist, but there is a different game. And I know this because I watched not White Men Can't Jump, but what was the other one with, what was the one Tupac was in? That was a good movie. I haven't seen it in 100 years, but yeah. So they're just different game, and I'm not here to say one is better than the other, but they are different. Okay? Yeah. Okay. Well, Theta has a question, but Wayne, every month open we will have the fundamental bias plus seasonality bias, but you can wait if the market does not give you one. Yeah, well, that's what I'm saying. You will have to make the choice, Theta. Okay? Theta asks great questions all the time, right? Thank you, Theta. I allowed the day trading group. We saw a lot of things like this, not just on WTI, but on a lot of pairs. And I said, look, that's not good for a bullish bias. And then I would say, and our actual buy price is down here. And we talked about it. Hundreds. So again, on a pair, not on WTI. But I said, look, it's hundreds of pips below. Wow, look at that. Below. I said, look, I see it. I see it. Right? We're a million miles away from where I actually want to buy. So I said, be cautious up here because you don't want to buy a high. Many of these were out of position. So we know what that means as day traders. We're not dumb. But I'm like, so you have a choice. Trade it down or wait. I said, I'm going to wait, but that's because I'm going on this institutional side. But I said, I give you full permission. I won't yell at you. I won't laugh at you. I won't mock you. But you need to make that decision, not me. Okay? Above the Rim, right on. I think it was a good movie, wasn't it? Yeah, that sounds right. Okay. Brinsley's likes price action. Yeah. And Fibonacci on a 4-hour daily. Oh, yeah. So those are basically a form of swing trading. Hey, Brinsley? Okay. So let's pick on a currency pair here. Well, I guess we're stuck in commodities, but so let's do gold. Okay. This is me backed out, and I'm trying to show you that gold hasn't actually done much this year at all. The Tao of Pooh. Okay. Yeah, well, Oliver says Zen in the markets is necessary. You do need to have calm nerves or a personality, or at least be able to manage your emotions. I was just telling a story just recently about that, in fact, where somebody wanted to invest. My typical response is, well, I don't take money from people I don't know. So, hey, let's get to know each other. Hey, great. You want to go golfing? Sure, let's go golfing. We're on the 3rd hole of the golf course. There's 18 holes. We just got started. And he misses a putt. And he takes his putter and he goes, bang! And he puts a hole into the green. And he's like, God, yes. And he was pissed off. Just like, can't control himself emotionally. And dude, there's a lot of etiquette to golf. But slamming your club and putting a hole into a green, that was the end of our relationship professionally. Just like, nope. Okay. Could not control his emotions. I'm like, dude, we're golfing. Why are you even upset? You missed the putt. You should be pissed at yourself. You pushed it. I saw you do it. Like, dude, it's a game. Tap it in. Let's move on. Right? So anyways, yeah, if you can't control your emotions, you're not going to be a good trader. Yeah. So I think it's interesting that this hasn't done much at all, huh? Somebody asked about, Bitcoin. Well, Bitcoin is down significantly from the top, but is still up 100% for the year. Gold, okay, yeah. Oh, thank you, Hope. That's nice of you. Okay. So don't get overexcited about gold, but nothing happened this year. And you could probably measure it going back from the top of the year to now. It's not bullish, although we had a nice little bull run. Okay. So I think that's interesting to talk about and say, well, gold's been volatile this year, but it's basically range bound. Yeah, Brinsley, I like that way of trading for sure. Okay. We do that a lot in the day trading group where, you throw down your limit and you go to bed. At least I have to do that a lot just on the timing because I don't trade the London Open because my time zone doesn't work that way. The London Open is 3 o'clock in the morning. That just doesn't work with my lifestyle. So very often I'm in the Asian session and I'm watching Asia Open. If I get a move in Asia, I usually take a shot and drop a stop. But very often I don't. And so what I do is I look at it and say, so let's say I'm above a daily pivot point and I want to buy. And Asia doesn't give me a decent pullback. So I'm still above the pivot. So I can't buy because in that case, it's still too high that it's above the daily pivot. So what I'll do is I'll throw down that limit order and say, okay, well, if I get that retracement down to the daily, pop in a lot. And then I use an EA that then throws down a stop order and a limit order. Okay. Thank you, Russ. I appreciate that. Javier says, gold will move more when there's some fear in the market. Well, going back to this, there's been fear all year. Okay? So other assets have moved more. So let's take a look. Let's compare gold with oil, for example. Okay? So gold was sideways to slightly down. Oil has been straight up. So you would have been better trading oil than trading gold. Oh, the OCO is part of MetaTraders. The link is in the description below. But let me give you an example. Let's go on a currency pair. Okay. Now, if I were a seller of this, let's do it this way. Let me change this to a bearish point of view. Okay. So as a day trader, let's say I wanted to set up tomorrow's trade, I would do this. Done. Okay. But now I'm naked because if it comes up to 112 and hits this, it puts me in, but I have no stop loss and no limit order. So what I do is I have this running on my charts. And my standard operating procedure is I'll risk 33 pips to make 333 pips. So I would do this. Okay, and when you see the smiley face, what'll happen is when price comes up, hits this number, it will sell, and then this kicks in and says, put a stop, which is above us, 33 pips above my entry price. So it'd be 112.44. And then put a limit order way the heck down here, 333 pips away. And to me, that's me day trading into a swing trade, because I don't tend just to day trade. I tend to trade in the direction of my swing. And I prefer my swing to be in the direction of my bias. Okay. Okay. Can you also just set the stop loss on your, well, I think what you're saying is if you go through a new order, you can set this manually, right? This takes me so long to do. Maybe it's just me. But when I first started trading, even having something like this wasn't even that available. So you would have to set up a parent and child order. So you'd set up a market order, okay, with a child, right, order, and it took too long, okay, right? So what I do, guys, is like, if I wanted this to be different, when I enter the auto stop, okay, so it'll ask me again if I do this, okay, do I really want to do the auto stop? Okay, I can just do this here and say, okay, I want this to be 55 and I want this to be 111, okay, done. Now the interesting thing is if I get put in, then it does the 55 stop, the 111 limit, so that was super easy. But then, of course, I can drag and drop all these things whenever I want to. So once I'm in, I can move my stop, I can move my limit, all that kind of stuff. So I just find this easier because I know if I get into a trade. Now, remember, many of my trades are happening while I'm sleeping. Okay. Okay. Okay, Javier's talking about a 20% drop in the S&P. I think that's too much. I think maybe 10%. But I already have a pool of money waiting for that to happen in the in the first 3 weeks of January. So I already expect that, Javier, but it wouldn't be a fear. I don't have a fear. I'm ready. I'm expecting it to happen. Okay? Okay? Yeah, I'm just looking for something. I think it might be in this one.
You buy DBFX from Deutsche Bank.
Trading currencies, like many investments, can be risky business. The 24-hour-a-day market is highly speculative and extremely volatile, so you'll need to have a trading plan in place before you begin.
There's no 4 o'clock close. I need to realize that price action will continue on beyond in a 24-hour fashion, so let me understand and learn the tools that are there, like orders.
When you put in an order, the way that you manage your risk is by using stop losses and limit orders. You put in a stop order that says if things go bad, if your analysis was wrong and you start to lose money at a certain point, when that stop loss order is triggered, you're taken out of the market before things get worse.
Then there are limit orders that protect you when you're making money on the trade. They are also called take profit orders.
A lot of times what people will do is that they'll see their position move in their favor and then they'll let it completely reverse against them.
McDonell protects his trades using both tools, and when one is triggered, it cancels the other. It's called an OCO order.
When I place an order, I actually place 2 different orders, a stop loss to protect me from the downside and a limit order to where my profit target is.
Another phrase in the language of FX is being stopped out.
Let's say you want to go long, you're buying, the market turns sour on you, you're losing money. You have a stop loss order in place to protect your downside. When that stop loss is hit, you're stopped out.
With a proper risk plan in place, you have a better chance of surviving losing trades and profiting when you make winning ones. Thanks for watching Bloomberg. It's called an OCO order.
Okay. OCO order. Look at that. That's almost 10 years ago, huh? So that's it. I've been using OCO orders forever. When I place an order, I actually place 2 different orders, a stop loss to protect me from the downside and a limit order to where my profit target is. Okay. They're cool, right? Of course, I get the fish tank going on. Isn't that funny? So that's, you can see that you can actually see the old FX Bootcamp website up there. It was pretty funny. But that's where Sarah Eisen and I were hanging out talking about smile charts and stuff. She was so excited about these charts. But now she's with CNBC. So that's what the Wayne do. Up here, yeah. That was a funny day. I just couldn't. It was so bright outside. There was nothing I could do. So I was in a suite, well, a townhouse really. I was in a townhouse at the Four Seasons, and it was so big. It was dark. It was just cavernous, but it was dark compared to how bright it was outside. So I had every lamp. I had lamps leaning over with the lampshades off. I did everything I could do to get enough light on me, but you just, right, couldn't see it. That was so beautiful. I used to be beautiful, I'm telling you. So adorable. Oh my God. Okay. So what I've been saying here is that the only thing you could be doing since the end of October is selling. Now you can see even before that, but I'm talking about at the end, because a lot of the yen pairs we were long, several of the dollar pairs we were long. October was great, man. Crushed it. Okay? But you have to know when you're no longer right. Okay? And so I look at this, and you can keep selling this forever if that's what you want. Okay? Okay? So I guess today's conversation, I'll just leave it at that, but today's conversation is the dichotomy of forward thinking and then current observation. Current observation is a necessity. But if you want to take day trading and scale it, okay, you want to be able to have forward guidance, forward looking, and that would be fundamental. And there are times when there's a juxtaposition between both, like they counter each other. It happens. Doesn't mean they're wrong. Doesn't mean one is wrong, doesn't make the other one right. The thing is, there's a time when they disagree, and it's important to even know that's happening, because now you can change your behavior. Ultimately, okay, I want to make sure you hear this. Ultimately, this key to success for all of us, no matter what strategy or tactics you employ, is that you see reality. And reality can change. And I never once recommended ever that you trade your thesis despite reality. Okay? Never. You should see, oh, that's weird. That wasn't supposed to happen. I guess I should back off. It's a risk management tool. Okay? But I have one piece here after studying probably thousands of traders, looking at millions of trades. Ultimately, what is most important, no matter what you do, whether you use fundamental bias, macroeconomics, central banking policy, or pure technical analysis only, the only thing that will make you successful over long periods of time is that your stops are small, okay, your losses are small, and your winners are bigger. Okay? Your winners are double or triple or more than your losses. If you cannot let your winners run because you don't see out far enough, you just need to know just enough around the corner that the trade you took today is worth 100 pips, but the trade you take next week is worth 300 pips. If you can't discern the difference of value on any given trade, you'll never know which ones to let run and which ones to take quick profit on. And what'll happen is you will stay, no matter how successful you are percentage-wise, you'll always stay mediocre. I reviewed with my day trading group a trader that has a 73% win rate. It doesn't make any serious money. It never will, because the winners don't run. That's why they're so successful. They take profit quickly. They're so consumed by a high winning percentage that they never make any real money. So if you're a pure technician, I still think if you sprinkle some bias, you'll know which ones to hold for a day trade and which one to hold for a swing trade and which ones to hold for a position trade, and you'll be significantly better off. But you can stay technician, but let the good ones run. Okay? So that means you need to know the difference between being short-term short and long-term long. But you can't get to that position without a fundamental bias based on macroeconomics or the policy of the central bank. So if you can just listen to me just a little bit, just enough to sprinkle some pixie dust on what you're already doing so well, I'm telling you, a 1% change in what you actually do could lead to a 40% increase in profit. And that's what I want from you. Okay? So I'm not here to tell you you're wrong. I'm just like, let me just help a little bit, and it could have a big impact. Morena says, new generation of traders go for 10 to 15 pips with you. Yeah, so it's dumb. I will say that. That is dumb, in my humble opinion. In my humble opinion, that's just dumb. You can't scale. It's too much risk. There's no longevity. You might as well be a degenerate gambler. Okay? So have a wonderful holiday. Remember, tomorrow's off, Friday's off, Saturday's off. Sunday, if you're in my day trading group or my swing trading group, we'll do a special swing trading session on Sunday at 4 p.m. Eastern Time to get our new week on. And maybe with our arms wide open, we will be welcoming a Santa Claus rally. And that would be great. So peace on earth. May the pips be with you. May your profits be above average. And thank you for all your positive energy and amazing questions. See you soon.